Hey, what's going on, guys? It's your boy MC Fire coming at you again with another Sunday market recap. We absolutely love our Sunday market recaps because us as traders, we love Monday mornings. So anytime we get to do our homework for over the weekend, it's good. And taking a break from the market is agonizing. But I hope you guys got to spend time with your families, get into your hobbies, do what you do, meet who you meet, and greet who you greet. So if you guys don't already know, I'm MC Fire. And on Sundays, we typically like to do a little bit of our market research for the entire week or kind of see what's in play, what's going on, market news, fundamentals. This is more of our long form video as opposed to just like the daily recaps. If something's eventful during the week, we have our go get the bag cup here, so we're prepared. Let me take a sip. We really like this mug, made it myself, so you guys check that out, right? Um, Also, coming up this week, major gains actually last week, and we're going to take a peek at what actually made moves, what did make moves, and we'll actually investigate stuff like that, and see how you guys can get in on some of the action. So without further ado, let's dive right in. So we like to start out by kind of just giving a snapshot of where the market is today, where it's going to be moving to, hopefully based off the levels. Really, this is a channel for technical analysis, but we do dive into some fundamentals. We have some tools like our insight tool here via Qualtrum. It gives us really what we like to see as regards to certain companies and their fundamentals. So a lot of people understand like a name like Palantir, but they don't understand that your cash to debt ratio is really good, your revenue is good, price is rising considerably, free cash flows up. That's the reason why we're seeing a lot of growth in the company, along with its founder and CEO being an absolute genius. This is a really good handy tool. It's actually not that even that expensive. So I might actually reach out to the guy who created this, and maybe we can get a plug in on the channel so that you guys, if you really like this tool, then maybe we can get you the tool for a discount. That is coming, soon. So if you guys want to go out and get it, get it. But I'm going to be trying to get that for you guys. But market, so we do take a look at some fundamentals. Is kind of the point. But we like technicals really. We're going to hop back over to kind of get a snapshot. So this is absolutely free. This is www.barchart.com. You can go pull this up or just copy the link right there. And essentially, it gives us really the major sectors inside of the SPY. So you have the S&P 500. Here we go right here. And then you've got its major sectors: industrials, consumer discretionary, info and tech, consumer staples materials, uh, engineering, real estate, financials, communication services, healthcare, and utilities. And it's colored for you. So you could see real, like in a snapshot, what's really outperforming the overall market. Typically, we like to be traders in the outperformers. So the cool thing about working in the markets is you don't necessarily have to build everything from scratch. You can copy other people's homework. In the markets, copying other people's homework is what's going inside of your major ETFs, right? Your XLKs, your XLCs, your XLFs, XLVs, XLREs, right? All those major ETFs that make up the SPY, those different sectors that really make up the SPY and how they're divided. So somebody has to take time to put those stocks in that basket for those ETFs. If you ever want to go research any ETF, you can hop right over to our etfdb.com, another free tool, and you can pretty much search any ETF that you'd like. So a lot of people like the QQQ, but what if you wanted to know how the QQQ is derived, its dividends, evaluation, holdings, and analysis? You could see that, right? So what I like to do is I like to come in, look at the holdings, and say, okay, what is the primary holding within the Qs? Apple, Nvidia, Microsoft, Amazon, Meta, Broadcom, Tesla, Costco, Google. A lot of these names have been running here recently. A lot of these names have been moving. So that's the reason why we like to take a look at these, because I can match, well, what is the outperformers doing? And let me go find the movers and shakers inside of those outperformers. So the top dog right now is communication services. We can hop over and go take a look at the XLC. which is your communications services ETF, right? And then from there, you can go down and also look at holdings and see for yourself. You got Meta, Google, Netflix, some of these overlays. So if you're getting a push in the Qs, you're going to be getting a push in Meta and Netflix, as well as if you're getting a push in the XLC. There might be some overlay. So sometimes if a lot of buying's happening in Meta and a lot of buying's happening in Netflix or what have you not, you could see the overall market, like high tide lifting all boats, so to speak. So some of these names you've seen us take plays on, like Charter Communications, absolute mind ripping profits there. Percentage wise, we also took a play on EA. There's some other ones that we took a play on, but you can see also the weighting, right? So we just want to throw that out there. So you guys are given the tools here for absolutely free. There's no paywall behind the tools or anything like that. It's literally just me giving you the tools so you can succeed, essentially. Okay. What are the outperforming sectors? So we're going to highlight them at the start of this here, right? What I consider outperforming sectors is if you're outperforming the average, up or down. The market average is the average, right? So we take the S&P 500 as the benchmark. That's the median, right? The overall well-balanced, well-diversified market. And then everything above that is your outperformers. So in our case, we're going to highlight those for you guys now. I think consumer recessionary. I got underperformer, community service, financials, and let's get rid of that. And I think utilities. Which one? Yeah, these are, I believe, your outperformers, because this guy is under. Yeah, there you go. So your outperformers are communication services like the XLC. You've got info and tech. You've got consumer discretionary and financials. You can see which ones are looking to make a push, which ones are kind of curtailing at the end of on Friday. So this updates daily, and you can see this daily. So you can see these are your outperformers. So if you're looking for plays in these sectors, this is kind of where I'm looking to start hunting or head hunting plays in these sectors. And you can gotta look back for the year and see which ones have been outperforming regularly the market. Hence, if you ever wonder why we would take positions in the Qs or the XLC more than we would take positions in anything else, or why I would prefer to buy the Qs as opposed to just SPY, is because the Qs is an ETF. It is diversified, concentrated in the technology sector, but it outperforms the market consistently. If you look back a whole year, the Qs of the red or the info and tech sector, if you look back, let's just compare these two or juxtapose these two, it's been consistently above the market most of the year. There's a little point here where it dipped below that, but outside of that, I'm here right here, but outside of those two instances, it's pretty much been consistently above the market. So if you want to get outsized returns better than the market, if you want to beat the market, just look at the data. And this is hard data for you to say, hey, I don't have to be a mega guru and pick each individual stock. If I'm in the right place at the right time, right, or I'm in the right vicinity with the winners, then you're probably going to be a winner, right? You're flying with eagles at this point. So info and tech, you could look at maybe financials, see how often that's been above. Right here recently, it really surged with the interest rate cuts kind of deal. But for the most part, it pretty much tracks at or below. So financials, you can get some of that, but you're essentially going to be trading with the market. If we look at communication services, a little bit different, right? Same thing here. So if it's pushing, this has been consistently above the market. So you can look at the Qs, XLK, or you can look at communication services, XLC, to look for something that beats the market. If you want to beat the market, if you want to beat the average, look at the evidence that shows this is what typically can beat the average. We also are going to take a look at what is it? I think consumer discretionary was beating the market. Yeah, that's here recently, right? So around this time, like holiday time, consumer discretionary probably will see a spike. You know, we had the Black Friday, which actually they extended that for kind of a month, and so increased probably revenues, probably made this drive very, very profitable and increased balance sheets. So But as you can see, if you look back, not too promising to maintain that consistency, right? So you look back a year and say, yeah, you recently crossed, yeah, you're above the market currently, but how likely is that to be compared to something like this? It's pretty obvious, right? Where do you want to be if you want to beat the market? There's one spot, here's another, right? Boom. If you're looking for underperforming or maybe a different flavor of trading, right? Looking for something that you can get at value, XLRE is something that you could probably get at value. It's currently decreasing, but you're buying this for a little different reason, right? If you go to the holdings here, a lot of the XLRE holdings, they're gonna have something a little bit more dividends attached to them. Okay, so we go look at XLRE because it is underperforming currently. What I like to do is I'll come down here, and we'll go to holdings, and we'll see. Oh, not XLE, XLRE. Sorry. Boom, XLRE, right? A real estate sector fund, right? And this is it's almost like if you bought into paper real estate essentially, right? You're not actually going out buying the home, but you are buying the REITs and the associated ETFs around that. And you can see what those are, right? Here they are. Boom. O is one. And so what I like to do is, let's say I'm looking for dividends or stuff like that. I can assess. Let's say we go into. Let's just pick IRM, one of my favorites, O, and then we'll pick well. We'll hop over here, right? We'll get O. We'll take a look at that, and we'll see. Okay, it's got decent revenue. Prices kind of down. Cash to debt's high. It's real estate, kind of makes sense. Net income. But then this is kind of what I like to see, right? We pop open right here and we just take a look at the dividends. Is it increasing? That's really what you're looking to get with real estate. So if you're looking to be a dividend investor, this is the place where you can come look at that, right? We just pull up O really quick. We can also pull up IRM, Iron Mountain there. Yep, been on an absolute tear. Revenue's looking good. Dividends looking great. So we like to see. So kind of flat, right? Not really, slightly, really just flat, right? Not really increasing, not doing anything. But the price has been absolutely mammoth. Revenue looking really strong. Free cash flow not looking too good. That's the lifeblood of any business. And of course, this is a real estate style business. So debt is going to be paramount, almost a non-factor, right? Really what you want is free cash flow to be positive. It's really the most important thing. And I think we said we're going to look at well. Let's take a look at that. So, well is up 43% on the year, right? Its revenue extremely high, free cash flow extremely high, and dividends, right? Boom. So when I'm going in and I'm looking for maybe a position to long-term buy, then this is kind of what we can hunt down. Like, hey, I'm looking for a dividend play. Real estate is a good sector. Somebody's already done that homework for me. Boom. Then I see, okay, what do the fundamentals look like? This one has probably some of the best fundamentals. Free cash flow is not in jeopardy. Dividends looking good. Cash and debt looking good. Price slowly increasing. Revenue increasing. So that's kind of what you want to see. And then we'll jump over to our handy dandy charts over here. And we'll say, okay, we'll pull up well and see if we can make a play. Now, it's currently in the stratosphere, right? If we wanted to be a trend change buyer, ideally we want to be right here, but we can't go back in time, right? So if you want to be a buyer in well, right, how I look at things is buying the trend changes as it breaks week's high and it changes the trend. That's kind of what I want to do as a long-term buyer. This fall, don't want to be in that, right? But once it changes, you take the buy, you really dump money into that buy on the trend change, get like multiple thousands of shares if you can, and ride it on the way up, right? We have certain setups for how to add during that period, but essentially, right, you see well here, and if it starts to put in a certain signals, like you can see right here, 1, 2, 3, 4, it isn't an uptrend. So if, let's say for example, I put this in my watch list and I say, okay, we're going to create alert that this setup candle right here, when it breaks that in a sustained uptrend, we want to see a buy. Now, I'm going to explain what these things are here in a second, but I want to see if I can find an example. Again, this isn't cherry picked. I'm coming on here, I'm showing you guys what exactly I do and how I do it, right? We are using a combination of multi-time frame analysis combined with what I call setup candles and triggers. Those setup candles are found over here, right? It's something that we over here at Fire and Ice have developed to be able to find setups, right? Typically, it's a candle that has outperforming larger than normal performance on that day. So if you go to like SMB Capital, they'll say, oh, this candle, this stock is in play, meaning that there's a little bit more performance on the day. Now, where we get our edge is, and this is not necessarily something that I came up with independent, we stand on the back of giants, but I'm sharing it with you guys, right? Let's say the trend changes back here. So what we will come do is we'll put this line right here indicating what? The trend has now changed. The trend from a basic, very basic moving average cross. Some people can use the MACD, moving average convergence divergence, however you want to do it. But essentially, we get a golden cross, right? A slower moving average or a faster moving average crossed above a slower moving average. The 8 in this case crossed above the 21. So before we hit our cloud here, we got an 8 and a 21 period moving average that shows us a cloud. When it crosses negative, red cloud. When it crosses positive, green cloud. Pretty straightforward, right? Now that we're in an uptrend, you see the green line here that is populated on the daily as well. Now we're looking for a setup candle, right? We don't want to just buy just because the trend change. We want to, if we get in, have the potential for it really to rip, right? Really to rip in our favor. So the way I like to classify it, guys, is this is now green territory. Everything to the right of the line, as long as the moving averages cross green, that's green turf, right? Outstanding. Now, you see this guy, he's red. He's in the wrong turf, okay? So let's zoom in on this guy, red, right? The stock is moving up, but we see red here. He poked his head out in green territory. Now, when the price catches up to all these reds, what I like to do is I'll take the buy, right? Boom. It's in an uptrend. Red showed his head, and we take a buy where the arrow is. For the sake of example, we'll make it large, and we'll make it gold, right? So right here, you can see on the weekly where necessarily that position is. We're in an uptrend. We have a position now, and where's our plan? Where's our stop? Well, at the maximum, we're 2-bar professionals. You can take the stop out here right at the level, or you can go back 2 bars. The next 2 low is bars. So let's say, for example, we put in a low there. That would be our stop out. No more than 2 bars. I call it being a 2-bar professional because with the edge and how it's presented, a lot more than normal participants got in specifically to the downside. They got in on the downside in an uptrend. They're bucking the trend. So if it goes against them, what do they have to do? Well, they have to get out of their positions. And what does that do? If you're a seller, how do you get out of your position? The beautiful part is you guessed it. If you're a seller and you have to get out of your position, you must be a buyer. If you're a buyer and you have to get out of your position, you become a seller. So you fuel this rally, right? So as it goes against this setup candle, against this red candle, because he's in the wrong territory, it then rallies. That's really the edge, right? You can get the trend change, but there's no real edge really there for me to say I just want to buy just because it changed trend, right? Not really what I'm looking for. I'm looking for my plays to throw a setup candle and then immediately run away from my entry point, right? Because I'm typically an options swing trader, so I need there to be a little bit more push away from where I got it, right? As you can see, the follow-on days did pretty well. Went up here pretty good. Then you get a very nice blowout candle. Now, what I call blowout candle is this. Typically, and I'm gonna maximize this. The performance of a stock goes in cycles. Typically, there's 4 cycles, and in those 4 cycles, what most people don't understand is that in an uptrend, a downtrend, or a choppy or a rotational trend, right? Which cycle are you in? So right now we see this cycle It's changing. It's going into an uptrend. Inside that uptrend, when you are trying to be a buyer in an uptrend, people's mindset and framework thinks that up is good. I don't agree. If you're in an uptrend, for me, I want to be a buyer in an uptrend. That means I have to buy the what? I have to buy the dip. So if I have to buy the dip, down is good in an uptrend for me. And it's just flipped in a downtrend. If the momentum is going down, I want to be a buyer. So it's going down. So up is where I like to get in the position for the rip to the downside, right? So close to the moving average cloud is good. Away from the moving average cloud is bad, but you're taking profits. So that's really good, right? So really, for us to get in, we want to get in the best price. You make your money on the buy, not the sell. So the buy here gives us this nice rip, and this nice rip corresponds into the blowout candle, right? As it pushes far away and we get this nice candle, what I'll do is I'll say, hey, I'll make a decision, roll it, take some off the table at this indication when the momentum is already pushed, it's already happened, and this is a very clear indication. It's one of many indications for me to potentially take some off the table. So what we'll do is we'll take that and we'll make this a purple just for the sake of example to kind of show if you got out on this blowout candle, you'll see it on our scanner there, and then boom. Would you be okay with buying at 72 and potentially getting out at 78? Most people, I think, would be okay with that, even with one or two contracts. $6 move, absolutely outstanding price action for well. That's just showing the example of how the system works. This is still an uptrend, so if we found another potential setup, this is not cherry pick, guys. We're just kind of going through here, right? So there is a setup here. Let's say we set up candle. He's in, remember, we're still in green territory. So I'm gonna zoom in a little bit to kind of showcase why I think this edge is the best edge out there. Okay, this is a setup candle. It goes down 1, 2. So let's say we got in at the break of that setup candle. Boom, there, right? We'll put another gold there. Boom. Shout out to us for our new setup, but it immediately goes against us. Now, where is our potential stop? Well, we're a 2-bar professional. So in play, I call this in play, this is where our stop would be. I would respect all of our buyers, and this is where our stop would be. So I would say, okay, if it breaks below this candle, right, I will go ahead and say, hey, I'm wrong. Let's get out of the play. And so we would essentially take that stop loss, move on. It is what it is, right? Our setup didn't work in this occasion, right? As it rolls through another setup in kind of choppy territory. So you could take that. You might get, you would get stopped out there. And let's say you take that. No real run, so you did get stopped out there as well, right? Now, this one's a little different. This is also a setup candle, but it's highlighted darker because there's a lot more participation here. So on these a lot more participation candles in the same direction of the trend, I typically do like to be a buyer. So you would have got to stop out here, but these are small stop outs. I'm not really worried about win percentage. I'm worried about a profit percentage, right? Having your risk be very small, and when you're wrong, you be wrong small, but when you hit, you hit big, okay? Let's see here. So here you would have hit pretty big, would have been a nice double. Here you would have lost. You would have lost trying to round second. Essentially, would have taken that loss, right? Here, small loss. Also here, pretty small loss, right? Your entry would be around this area. Your exit would be around the low, right? Same thing here. You take the buy and you respect your buyers. 2 bars. We'll say right here. This is where I will put my stop, and then it absolutely takes off, right? So these couple stop outs, you essentially break even. Now, if we push forward, a little too wide to take that, but you could take this. It is a little bit more narrow with the stop out. 2-bar professional, maybe stop right here. It pushes, outstanding. Same thing here. This one is payday, right? You've got earnings, post earnings. Set your position up correctly for the earnings play. Whether it's you want to trade for volatility squeeze, which is you want to be selling for premium, you could do that. That's actually a pretty decent play. Or butterflies work in this environment, aiming for pivot highs. So let's say, for example, it crosses above this setup candle. You put a butterfly into highs. That butterfly ends up hitting. So you could potentially see 100 to 200% returns on a smaller position using the right tools, right? And over here, we like to use all of our tools, not just the easiest ones. We just want to be professional. That's all we really want to do, right? So this would have took a nice juicy rip, happened to go high, roll it, make a decision, take your butterfly off, whatever you want to do, and it continues going if you hold it, right? This is also, you see at the top of the range, I kind of use those as blowout candles as well. When there's way more participants on the end of moves, that's when I like to make a decision. I like to get in at the beginning of moves when participants like to take, like when there's more participants inside the cloud, and I like to get out of moves when there's a lot of participants away from the cloud. Okay. So if we're getting setup candles down here, I like to get a buy close to the cloud, and I like to get out away from the cloud. And you can just keep doing that all day, guys. Like, that's the mindset of which we want to apply. Like, that's our meta. That's our strategy, right? We want to buy close to the moving average cloud and sell away from the moving average cloud, right? And just like a river going downstream, you really don't need to swan dive it perfectly. If you're getting in the stream and it's going the right direction, you have nothing to worry about, right? You're going this direction, your dive might not be a 10 out of 10, but because the river is going that direction, you eventually will get where you're going. That's why the trend is your friend. And a lot of times, reversion to the means, unless it's a stark reversion to the mean trade, I almost avoid it because there's so much edge in not doing a reversion to the mean. My mouse is being super weird, but let's see if it works now. You get a mouse working? Nope, I think it died. So we'll just have to use a good old mouse pad. But essentially, right, this is just as an example, right? So we don't want to go off too much off of there. So I'm gonna go make sure that I get to show you guys some other to-do-das, right? We've got the next Fed chair meeting on the 18th of this month. We'll scroll down here and we'll take a look at the Fed chair, right? So next meeting date, 18th of December, right? The potential for the current range is 4.5 to 4 3/4, and its potential to be cut to 4 1/4 to 4.5 is around 97% according to the analysts. This is huge, guys. So combine that with your Forex factory calendar, and you can kind of see holistically financial news and what affects you and what affects the overall market, right? Just so you are aware that you might see a bull run or stocks continue to push. There's going to be a lot more market sloshing around if there's rate cuts, right? So the Fed has said, hey, we want to cut rates going into the mid to end of next year. And what that means primarily is there's going to be a lot more money sloshing around. There's going to be a lot more extended runs. So you can see that. But at some point, probably, my guess, we don't really know, but my guess is in September, October, November of next year, that could kind of get priced in the market, right? So this is going to be a decent growth period. A lot of optimism in the market. A lot of people are super excited that the market has already seen these price cuts combined with the election. Some people are kind of happy about that. So we can also look at the outlook for this week as well, and what major news events are there, right? So if we come in here, we can see that flash manufacturing PMI, that's happening on Monday. So tomorrow we're gonna have PMI on Monday for the US, right? There's also other stuff going on for Great Britain and the EU, but we're really primarily concerned about the US market, right? Other core retail sales also are on Tuesday. These are hot zones in the market, so if you see some whiplash throughout the whole week, that's why. Monday and Tuesday are going to be pretty hot. So retail sales going into fourth quarter, we'll see what happens, right? Wednesday, Fed funds rate, right? Fed funds rate. That is the meeting that the Fed is anticipating cutting rates, right? So as you saw, the Fed Watch tool is saying 97% cuts. That's going to be happening on Wednesday. As soon as the Fed chair starts speaking, if you guys are individuals that don't necessarily like volatility, or you just don't have an edge when the Fed chair speaks, just be cognizant of that, right? For us, don't really care when the Fed chair speaks, don't really care when earnings are, because the way we set up our positions, it's to ride an overall momentum move up or down, depending on what we see on the technical standpoint. A lot of time, what most people don't know is the technicals a lot of time will override even the earnings. There is some occasions when that doesn't happen. Obviously, that is the case, and it is, the widowmaker for a reason, earnings that is. But we like to hold to our guns even through earnings. Outside of that, that's really the big news. Wednesday, Fed plans on cutting rates. So shout out to us. So let's go take a look at some plays, man. Let's go look at some plays. So hopping right into the market, we'll go look at the in plays. Currently, you got, let's do this. We'll go scan. Let's do weighted full scan. Yeah, we'll do RVOL scan. Weighted full RVOL scan. Yep. So we'll run it because sometimes it likes to clear it, and so we want to just see what it is currently, because it's bugging out here. And then we'll take a picture screenshot of that. Boom. And I'll go take a look at that on my end. Cool. Just so I can have that list for you guys. Cool beans. Okay. Because once I click off of the scan, it's not gonna pull it up, right? Okay, cool. Like, I can't just click it and it goes right to it, right? So essentially, you've got AVGO, you've got Duke Energy, EXC, Nacor, Uber, UNH, and UUP, right? So a couple of these are pulled up. So we'll dive into those first. You've got Adobe here as well. So we'll take a look at that. All right, so shout out to Adobe, downtrend. We'll get off on the weekly here and see, was there a position potentially to get into Uber? Not really. Well, actually, yes, really. I think we even said that Adobe, if we watched one of our previous videos, the green was here and it already ran, so there was no real opportunity to get in. It was clearly a setup that was there. We got the alert. We even put the line there that, hey, we're looking for it to break that level. The only issue is by the time it opened down here. Not really chasing that. The move already happened after hours. So if we go look here, right, major gap after hours, gap and run, plenty of fall through the next 2 days. Not really looking to chase that to the downside. If you were going to be a day trader, yeah, you could probably catch it on the bounce into your double moving average cloud there, but essentially not looking to chase that. The setup does kind of work also the other way. So if you're in a defined downtrend, right, you want to short the rips. This is a rip into 2 standard deviations. So here's your green right here. It crosses below. You take your stop out at the high at around 2 standard deviations and ride that puppy all the way down. It works on all time frames, but the reality is I prefer to working on the swing because I want bigger winners. But it works essentially the same way. That was in play. So some of these are coming in kind of slow, which is fine. Will AMD absolutely getting hammered, right? To the case in point, right? We a lot of people will say, "Oh, I want to just buy AMD," but the evidence is showing that AMD is, yes, it's a name brand, yes, it's in the same league as Nvidia, but what is price always has a say? What is it saying right now? You are clearly in a downtrend. You've been in a downtrend for a minute. This is the start of your downtrend, but you can argue neutral because the 21 period moving average didn't actually start pushing down. At this point, you are definitely in a downtrend. There is no doubt about it. The 21 period moving average is sloping down. The 8 period moving average is below it and sloping down. So any rip, you are looking to take that short. Any rip, you are looking to take that short, right? It briefly crossed green, but here, same deal. Any rip, it goes negative, there's your rip, and then there's a little bit of a gap, and it runs. Setup still applies here a lot of times to the downside, they kind of gap and go, there's a little less opportunity to get in. Okay. They're kind of coming in slow, which is fine by me. UNH. So kind of same deal here. And you can see that the plays, they work. Not necessarily chasing these plays because I was looking for more plays that are bucking some of these downtrends. I prioritize uptrends, downtrends, and then rotational trends. So I will prioritize first uptrends. This was, if you watch some of our previous videos, we've been talking about this a lot. We could potentially see United Health, because of what happened to the CEO and his passing, the stock's been taking an absolute beating. Even so, I want to make a very clear case for the system, and this is a prime example of that. If UNH, right, is in a downtrend, there is a slight opportunity to get into this play. You can see it, right? Clear downtrend starts right here. There's your downtrend, and then there's a rip up here with the setup candle, just like I said. So if it crosses below the low, what's your play? Now also, right, it's bouncing within the top third. That's another thing we'll talk about later. Bounce within the top third, high potential for continuation, very high. You get the setup, you take the play at break of that low, stop out at the high, and then boom, the next 2 days was absolutely massive, right? You would essentially be getting in at 556 and would have been getting out on your blowout candle. You can almost take that 532. You can almost take that also at 513. Massive move, but the setup was there, right? Very clean, very concise setup, right? Very clean, very concise setup. It paused, respected that, took the sell, bounced within the top third. Shout out to UNH. Also, you have Costco. So we'll take a look at Mr. Costco. Really clean uptrend. This is kind of what I'm talking about, a blowout candle. If you're taking the buy in the Costco, right, you could potentially see that this might be a buy here. If you take it, awesome, and you hold it through all this chop, probably wouldn't have done that. But once you see, okay, there's a rip, even if you take it away from the moving average, this is a blowout candle at highs around 3 ATR on the weekly, not the daily, not the 10 minute, not the 5 minute, but on the weekly. This is three times the average true range on the weekly position. Because of that, and you see massive participation, active participants there. If it goes against them, it's a high probability that it's going to return. I like to see, right? When did this bad boy start? It's uptrend, kind of back here. There's definitely I put in some of the previous videos, like we looked specifically at Costco at some potential. You can get a heads up even back here. I'll show that briefly, but we talked about that in a previous video, right? So if I put this here, you can go back, not almost, you can see where the opportunity clearly was to get into this position, right? You do have a wedge. There is very, very defined. This is now an uptrend, right? Green cross. Not only do you get the darkened setup candle there, you get a red candle. He's in the wrong territory. This is green territory. And you get a red candle there, and it crosses above, and it continues. So I don't know about you, but that is a very clear, very concise setup. Massive participation here for the move. Setup candle pulls back in the upper third. I want you to keep seeing that pattern. Massive move, pull back in the upper third, and then crossing above, follow through is locked in there. So shout out to the setup. Shout out to the wedge there too. Costco's been on an absolute tear. There's been plenty opportunities to buy on the way up as well. Here's one, little wide for my taste. This one kind of loses the edge. I like to take that setup trigger within the first 3, maybe 4 candles. The most I've ever done is 5, and that's for a name brand like AVGO. This guy right here crossed above, nice juicy rip, would have took that. Same thing here, crossed above, nice juicy rip. Even with the opportunity, setup candle to buy if you're looking to be a little aggressive. Boom, follow through, buy, boom, continue. Here's another one, boom, slight rip. It even slight rips and then kind of pulls back. So even if you did get stopped out, you bought here, you got stopped out there. Like, come on, guys. This is We could do this all day, man. We could do this all day. I'm absolutely loving it. So getting in here is like mad late. You want to be in trend changes. We've got a couple trend changes for you. I'll give you the first one that I saw. Close this here. First one that I saw was corn. It's not here, but I'm gonna bring it up for you. Boom. So corn, right? New uptrend. Eight in the 20. The 8 crossed above the 21, and the 21 is actually starting to push up a little bit. There's a setup. If it crosses above, look to be a buyer in the commodity corn, right? If we look at historical data, right, these rips in corn, major pullback, major drops, and then when they rip, they kind of do run. So hopefully we see something like this in corn and when the commodities ETF. But yeah, if we get something like this and there's a setup, cool, we're gonna take that. What would be our play? Pretty straightforward. We're gonna let me exit out of that. Sorry about that. So the setup, there was also a setup back here on corn, right? But I'm building a new watch list for just the ETFs, right? I just want to know when certain ETFs and commodities are moving, not just the in-play stocks. I want to know when certain ETFs and commodities themselves are actually in play. So this guy right here would have been great. Again, I want you to pay attention. I don't take all of these setups, but when I do, a lot of times they are immaculate. This setup right here, green territory now, back here. This goes red. What's my play? Well, does it cross above a high in about 4 to 5 candles? 1, 2, 3. On the third candle, you're in. What's my stop? Stop out at the low. I want to respect all my buyers. So all my in-play buyers, for sure, I want to respect. Any buyer, I call it in-play buyers, meaning this is your in-play setup candle. Any bar below this, I need to respect that because those are the buyers that got above that candle, right? That fought through those sellers to get above and got those guys off sides. I need to respect them, right? Those are the big boys that are buying into that more pronounced pressure to the opposite direction, right? And then boom, absolute rip with a blowout candle for you to kind of know, hey, heads up, this move has participants that are buying or getting involved away. So they're selling. Now, once it crosses above, again, pay attention. From the pivot, this pivot where the move kind of started to the high, we could kind of mark halfway here. So it's close to the upper third. So if we get across above, that is what I would say, okay, definitely want to be in this potentially to buy this and hold it for the long term as a potential long-term buy, right? This is kind of why I wanted to show this. The trend's changing, unbalanced volume is increasing, the setup is here. There's a couple dip buys. It's made a higher low. Here's a low, right? So the trend is now kind of pushing in that direction. We've retested the high, barely put in a higher pivot high. So technically, all pennies considered, we are now in a very clear uptrend, right? And in the babies of a clear uptrend by all stretches. Unbalanced volumes increasing, making higher lows, making higher highs, and moving average cross is positive. There you go. That is one. I think we hit these two. So we'll tap into this guy right here, right? Same story. You'll see it time and time and again. This is the really your dollar in play here. Green territory, red pops in, stop out of the low here, and then absolute massive rip. This is kind of what we want to see because of what? It gaps. It not only just rips, it kind of gaps and goes, right? It gaps, slightly pulls back. So you could maybe take this position, but I would still respect all my buyers. I'm not even kidding. You're still being a 2-bar professional as well. So this is 2 bars lower than your entry candle, right? So this is what we're looking at right here. Boom, 2-bar professional. If it crosses above, that's your trigger. Your in-play candle has now been crossed above. It's in the wrong territory. These guys got to unwind their position, fueling the rally. outstanding for UUP. I think we talked about that in the previous video, but here moving forward though, sustained buying pressure, so that's really good. But we are in danger territory. If you look on the weekly chart, well into the 3 ATR mark, right? So just be cognizant of that. It might be a good look for your aversion to the mean traders, considering that it's up here close to relative pivot highs. That's another thing I wanted to know. Close to relative pivot highs. Uh, your aversion to the mean traders, if you get some confluences that say, hey, I want to take it to the downside, shout out to you. Not necessarily my cup of tea, but hey, there's different strokes for different strokes. We got Duke Energy. Shout out to Duke Energy here. Again, pronounced or a newly downtrend. So when moving averages start to cross, you do want to take note. You can almost put a scanner on the ones that you want to follow. If you guys want to see a video on that, put it in the comments. I'll show you guys how to set up a scanner for when moving averages cross on the weekly, daily, whatever. It's essentially really easy for stuff like that. But here is a downside position, right? New trend on the weekly. And you're just seeing sustained follow through. Not really seeing a setup that I want. The beautiful thing about trading is you don't have to swing just because you're sitting in front of the computer, you're at the bat, you're at plate, right? You don't have to swing. There's no umpire that's going to say 3 strikes you're out. If it's not exactly what you want to see, don't swing. Don't take the position. There's going to be plenty of opportunities to get into the market and express your inner trader. So do not take a trade that you feel just because somebody else took it. If it doesn't have a setup, if you don't have a plan, there's no edge, there's no trade. Simple as that. DHI, there it is. We're looking at the play in action. Look at the difference between Duke, even though it did run just because it changed the trend, Duke and DHI. Look at the difference. You can very clearly see on the daily where you would want to get in. Pronounced push to the downside. The trend now changes. Then there's a slight rip to the upside, right? There's your rip. These guys, red territory, green, you're off sides. Congratulations. What do? Take the position to the downside. Massive follow through. Massive follow through. Simple edge. Simple way to take our clear trend, our clear play, and make it constant. Now we did, while it was an uptrend, we took a position. There was a gap and go. It happens, guys. I'm telling you. So how do you get around this? Because some people will say, "Well, see, your system when it goes against you during earnings, what do? Well, guess what, guys? This is something we call risk management. The beautiful thing about options is if you're a buyer in options, what's the maximum you can lose in buying an option? Well, you guessed it. What you put up to buy the option. So the most you can lose is what you put up as the premium to purchase that option. As long as that was well within reason for what you are comfortable with losing, this game, you have the edge. So if you're putting 50, 80% of your account on the portfolio and it goes against you, there it is. You're already playing with leverage instruments anyway, so you don't need to put a lot on the table to see decent returns, okay? So that's there. Uber. We are seeing setup candles in Uber, but nothing really that we're looking to kind of take, right? Pronounced push, pull back in the upper 1/3, fall through to the downside. It is a setup there, guys, but I like to keep my stuff simple. But Uber is struggling. If you notice, my target for Uber, right? If I had a buy bias on Uber, these are the things that I would want to see. I would want to see it to get down between this 54.93 and 57.80, 57.27 level, marked yellow and marked white here. Once it gets down there, I would look to see kind of what it did back here, which is throw kind of our biased setup candle. So you can see here, kind of got down to that level. Yes, it was earnings. Threw a red, crossed above, started running, right? What would be my position? It'd still be the same way. I'd take this buy at the open, stop out at the low. Massive returns there. Hindsight is 2020, but sometimes the stock might not repeat, but it does rhyme. So I'm kind of looking for a little bit of the same thing with pronounced selling pressure here. It's been here before, but I would feel comfortable getting a rotational play at this level, okay? There's a lot of if thens there, but essentially, if it gets down to this level, I would then want it to be a setup candle, meaning participants are getting in kind of late as a play is way far away from this moving average. See how far participants are getting in. So participants, instead of getting in close to the moving average cloud, they're getting in all the way down here towards 3 ATR. So if I'm looking for rotation, I'm going to be looking for it where I have a statistical edge by 3 ATR. And then you compound the edge with another confluence of the setup crossing above, massive rips, massive gains. Shout out to you guys, right? JP Morgan's next. We got JPM. Same story here, guys. JPM is part of that financials, those financial sectors. So let's go take a look at the financials there. There's my goofy screen there. So we go look at JPM, and we go look at our sectors. It's within the financials. I'll make those pretty clear where the financials are. Boom. 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 We're just going to get rid of all these bad boys till we just get to the financials, right? Bam. Right? Shout out to Big Boy Purple. So been really good since November. Really kind of pushed away from the overall average, the S&P 500, and has since slightly pulled back, right? So what we'll do is we'll come back to the charts. I want to show you guys what we do in that circumstances to kind of see who's outperforming, who's underperforming in that capacity. We'll go to our handy dandy flex grid, and then we've pre-built some quick ways we can find out who's our outperformers, our relative outperformers in the sector. So in the sector, right, we have on the weekly chart, the overall XLF, massive uptrend, shout out to it, right? But what are you noticing here? Double greens everywhere. Momentum and trend over the entire XLF is double green. Remember, this is an outperformer. We can look, though, and say, okay, you got Goldman Sachs here, kind of lagging behind everyone else. It's double yellow. So let's go pop that in there and see if we can find some juicies. See if we can key in on some key levels, right? Still really extended, but we do have an alert because there is a setup there, right? If it crosses above, that's the pullback we're looking for. We're just kind of hunting for where's the play at? Where's the move? Where's the pullback? But yeah, essentially massive runs in the XLF, right? But you get a first look, you get a first heads up that there might be a push above the average over here. You get to see that, hey, the XLF is kind of tracking with the S&P 500. It is slightly above, or it's like positions right here. It's pushing away from it. So I like to come over here like almost on the daily and say, hey, what's pushing away from the SPY? You got info and tech. When did that start pushing away? You've got consumer discretionary. When did that start pushing away? Was it recent? Yeah, it's recent. So you can start putting that stuff on your short-term watch list and say, hey, what is a potential play? Or you can even just take, instead of guessing at which individual stock, the beautiful part is, okay, why don't I just take the actual XLK? Why don't I just come over and say, okay, when I get a setup on the ETF, or XLF, excuse me, when I get a setup on the ETF itself, let me take that. What I found a lot of time is the ETF setups and the major blue chips, they are harder to manipulate. The setups are a little bit more crisp, they're a little bit more clean, and you're not going to get too many not going to get too many stops on those bad boys, right? So let's just let this run to fruition. Let's say you wanted to be a long-term buyer. You take the buy at the break. As long as it meets our criteria, 1, 2, 3, 4, it does meet our criteria. You take the buy, stop out of the low. Do you get stopped out? You do not. Now you could also say, I want to be a 2-bar professional. So the next bar you could potentially set your stop to. It is in play, right? Is this bar right here? But that is the lowest I would go. So really here, you don't get stopped. You get close, but you don't get stopped. That does happen. So I hope you guys have a good jaw, right? Have good chops. Here's another one. You take this, very nice rip. Shout out to you, right? Not in, so these are all in play, but there's no trigger. This guy's in play. You got a trigger, so we won't count him out. Stop out at the low. It actually does have a little follow through. So essentially, 3 plays, 1, 2, 3, were all positive. Had all decent follow through. It's in profit. You can take some off the table. You're starting to get up into resistance, so be looking more like taking some of those profits off the table faster than slow. Your pivots are already up here, so when you take this one, you're looking to take it off. Boom, up here, or up here at the high. Any of these levels, you can take some profits off the table. Let's see if we can do this again. No trigger. So this is a no trigger because it happened 1, 2, 3, 4, way beyond 5 candles. This right here, we don't want to skip over him. This is a stop out. So the other 3 were good to go. This right here is a play, and there's a stop out. Boom, right there it is. Nice rip though. Missed it. It's fine. It is what it is. You'll catch the next one. Here's the next one. Nice setup here. Crosses above. Massive rip. You definitely made up for this stop loss and this stop loss with this juicy rip. So this is why I'm talking about you now become the casino. The casino is not worried about the little wins and the little losses, right? They're going to have some big winners and they're going to have some big losers, but overall the edge is going to carry them through. And that's kind of what I just gave you. You just saw, you took 3 kind of double hits and then wham, this is a massive triple, right? And then you do it again. Here it is. Boom. Massive home run. And icing on the cake with a blowout candle. Okay, so just keep that in mind that you don't have to be right on every play. I'd rather us, stop out early, take our licks early, than try to hold and let's find out to see what happens. Okay, there's gonna be other opportunities like here to add, right? If you get stopped out on this candle, so be it. But you caught that, and you caught all of that. Booms, just natural, just cannons. Here, boom, absolute massive play. So don't worry about the little stuff. Tap into the setup and trust the process. That's kind of what we're talking about here, right? So that's XLF for you guys, right? Shout out to XLF. We want to get back to necessarily our in place. This JP Morgan. AMD. I think we did touch a little bit on AMD here. Defined downtrend. There is a setup in play. What I would look to be I would be a little bit more aggressive with this only because of the channel, but we still would have a plan, right? So when I say aggressive, I'm not talking about aggressive on the profits. On the profit, I'm talking about being aggressive on the take profit side and not on the stop loss side. The play is in. It actually did trigger, so we can put an alert here if it continues to cross below. Like this is what I'm talking about, a peekaboo. It peekabooed you in if you already got in. AMD to the downside. Shout out to you. But if it goes back down there, we get in, stop out at the high. Boom, right there. From pivot high to last pivot, pull back within the upper third. Follow through is high, relative high. So what could you do? I would be a little bit more aggressive on the profit. I would be looking for it to get down to this danger zone, or at minimum this danger zone at 115.97 or even 107.97 within a period of 3 weeks, right? So how would we set that up? We go into our trade tab, right? I would want to buy this for around 21 days, 21, 25 days. If you're feeling really optimistic, 30 days is also good. We're on the put side, so I would do 50-20 delta, right? Your delta is found in this column. I would take this. This would be my buy, 7, and then my sell. This is why I really like options too, because a lot of people come over here and they say, oh man, this option costs $750, but that's on the buy side. If you add a sell side to it, some protection that's cheaper than your buy, if it's cheaper than your buy, let's say it's at 17, Now my credit is, or my debit, excuse me, is not 750 but 582. Okay. Now I can change this. I'm gonna delete this. If I want to make it cheaper, I can take my buy and I can get a higher level of protection. Now in the play for $4.62, or essentially coming out of my account is $400.62, right? And you can keep doing this, right? As long as your buy value for the position, right, your ask is higher. Your ask over here, that's what you're buying, and your bid, that's the protection. As long as that ask, the actual position, is bigger than the protection, you can make this thing as cheap as it needs to be, right? This is currently $2.68. So I just got into a call position essentially for $2.68. Now we can go look and analyze what that looks like. So if you've ever been to the analyze tool, this is what it is. It's essentially saying how much will I get paid if it moves the way I need it to move, right? You got a vertical, that's what it is. AMD puts, that's what we would have essentially. And so the way it says is, hey, as long as it moves down, this cyan line here is your profit. So the most money I can make, if you look down at this area right here, it's going to show you as the price crosses, the most you can make on this play is 238 or 232, excuse me. The most I can lose on this play is 268. If you notice what you pay in the debit, that's the most you can lose. The most you can lose is what you paid for, 268. The most you can gain is 232. So essentially a 1-for-1 profit. So you should be looking to roll this position, taking some profits off the table when it gets to that upper limit, upper strike price. What strike is that? To 124, which corresponds to kind of your which corresponds to your typically your trade. You bought here, and this is your 124. So your protection starts making as much money as your loss, your losing position. Your protection position starts making as much money as your losing position. Hence why you get that kind of flat scion line, right? You can't make or lose any more money, right? It's at this point where you can lose more money, but once it keeps dropping, this is the most you can make, right? Is that 232 at expiration, obviously. Down here, kind of same thing. The most you can lose is 268. I want you to pay attention to the cyan line. Okay, that's the most you can lose. So people who say options are risky or options inherently don't have value, or most options traders lose money, it's because number one, most of them don't apply enough time to the options. That's typically the first thing. They don't give the option enough time to play out. Number two, they certainly buy out of the money, which a lot of times buying out of the money options is a sucker's bet. When they work nice. Because why? It's a sucker's bet. Really, you want to be buying at the money or slightly in the money. Most of the time, at the money, slightly out of the money, or right in the money. Right there. What am I talking about there? Let's go take a look at it. And this is, again, not telling you how to live your life, but this is kind of what we do here. So I like to buy at the money, right, which is here, right where the color changes. Slightly out of the money, that is this guy right here, or slightly in the money, maybe one strike in. A lot of times it's dependent on this number here, the delta. I'm trying to get close to 50 as possible. So sometimes I'll take the 53, the 54, whatever, and then I'm trying to sell the 20 delta. Okay, boom. So if I sell, this is your delta here. It's saying that, hey, there's 27. I kind of want to be more on the 17 side. Okay, so boom, there is that's kind of what we're looking at there. Okay, and that's how I would set that up if I was looking to be a seller there. So we'll go ahead and exit out of that. But now you kind of see holistically, get it for about 3 weeks, get your position to the downside, add protection, right? And that way, even if it gets away from you, very similar to what we saw. Let's go back to that chart. That one that gapped away from us. What was that, Uber or DHI? It might be DHI. Yeah, DHI. So even if this thing gaps away from us, what's the most I can lose? The most I can lose is what I paid for it. Really, if you can grasp that as a concept, Telling you, you will crush this game. You will crush this game. The most I can lose is what I paid for it. So I make the decision. I put my money on the table. This is the most I can lose. Set my line in the stand and kind of move forward with that. Next on the list is EA. EA had a massive rip. So we're looking to, like, the alert's already there, right? Didn't catch that EA rip, but it was there for earnings. I think I put that in one of the videos. Like, EA is here, but it's an earnings play, and there's other plays that I would like to worry about. Again, to the point, earnings can be a mixed bag, but when you see stuff like this, is it really a mixed bag? Right? The setup the day before was already on your freaking radar. Okay, it was already on your radar. And then it pushed, right? Crossed above the next day, and then follow through. Come on now, earnings, right? People get so freaked out about earnings. Same thing happened for CHTR. When we took this play, it was earnings. Well, a couple of days before earnings, but pay attention. This is another thing too. Like, how can you make a good plan for earnings? Well, here's a heads up on what earnings is gonna do. It's in the green territory. It's pulled back. Boom, right? You get a red setup candle and it crosses above the day before. Now we got a butterfly and we got a vertical. So kind of the setup you just saw is kind of set up on AMD. Just got it to the upside. 50-20 delta, a 3-week deal, and we got a butterfly. We'll talk about butterflies probably in another video. They are amazing tools. We want to use all of our tools. And then where do we target for the butterfly? We targeted the pivot highs, right? We targeted kind of this zone going from the high, which is 386, down to kind of this level of 336. Kind of that area is kind of where I wanted my high-low range for my butterfly to be. If it worked, cool. If it didn't, it's really cheap, and it is what it is. But the vertical ended up running, and the butterfly had a nice pause there. Closed the butterfly. We rolled the vertical, which we'll talk more about options and why they're so amazing. Partly is because you can roll them. You can roll them forward. So it's some really cool stuff. And then we ended up rolling it again in selling here once it crossed below our blowout candle. This is kind of what it looks like when it all comes to Picasso, right? It all comes in. This is what it looks like. But EA kind of did something very similar. Earnings going back. Where are we at? Different earnings. Sorry. Going back. Here we go. Yeah, here we go. Earnings right here. Boom. Right? Very nice push, right? Would have put a stop below if it crossed below. So I would have rolled it on the blowout candle with taking out my complete position if it crosses below. It pulls back, but it never really crosses below. It keeps pushing. So shout out to it. And then here, then I'd be like, okay, I probably can take it off because it's another blowout candle. Just with negative pressure. And then the fall through. And you don't get swept. So shout out to the system there. So that's EA. Waiting for a cross. If we were going to take this position to the upside, waiting for a cross of 162.17, right? It has kind of peekabooed inside the moving average cloud. It is a wide cloud. We'd like our moving average cloud to be a little tighter, and as it expands out of that tightness. So not ideal, but we can maybe target for a base hit, maybe highs. Hopefully it throws in a tighter candle this week. So shout out to it. Nicor, right? Made some massive gains on the up and the downside of Nicor, right? Case in point, there's no real setup right now. There's no rip to kind of short into. So we'll go back historically. Nicor, same thing here. Setups there. Resistance. I did bite a little early, but this is what I was waiting for on the core. I was like, ooh, it's bouncing up into this zone. If you know, you know. And then it started to fail. Once I saw the selling pressure inside the rotational zone, I was like, all right, let's go ahead and just pull this puppy, stop out at the high, increase my risk to reward ratio. What do I mean by that? Because I took it a little early, don't recommend you do that. I don't recommend you do this, right? But I did take it a little early, stop out of the high, This between this and this is a very tight, but my reward, if it completes the rotation, is all the way down here. That's kind of the point. That's kind of the point. As nice juicy base hit the next day, absolutely rocket ship to the downside for earnings, and was able to take it off from the blowout candle. Didn't want to get hit with a vol squeeze. We saw another setup candle and essentially got out as a cross high. So the setup works both directions, right? It's really good. And then we got out of the way for this bad boy, which ends up we got out of the way here well in advance for this next rip in a downtrend that we could have taken to the downside. We did not take that because of the amount of buying pressure, but it still was a setup as it crossed below the low to go to the downside, right? Brief uptrend followed by just continued downside. I don't even think the 21 period moving average even ticks up if we look at it. Barely, right? Barely. Barely Nicor ticks up, okay? So now we're getting into the good stuff. I think we covered these guys, Costco, AVGO. AVGO, as it stands right now, we've pretty much made our week last week with AVGO. Absolute mind crushing profits on AVGO. So setup was here, right? We went on and took that position and rolled it here and rolled it here, and on the day blowout roll at 3 ATR. That day was just massive, right? It is earnings. Not really intimidated too much about earnings. You just gotta be mindful of volatility squeeze or a vol crush. But the earnings definitely fueled that pop to the upside, and we call all that. And even if we look at after hours, I think that it's still pushing. So it's something to watch there. Boom. Yeah. Not SKY. Sorry, Striker. AVGO. Boom. So we're just kind of taking what the market gives us. Was pushing a little bit ago, but this thing's trading 24 hours, so it's kind of slick pulling back to where our roll is. So hopefully we don't take too much heat on it. We treat this almost like its own independent trade. So if it kind of crosses below here, we'll go ahead and let it go. But it kind of already made our week. We've held this play for about 2 weeks. It's about one more week on the play. We'll essentially let it run, and we'll pull it off as we need to. So shout out to AVGO. Massive gains on AVGO. It just took off like a rocket, and we were there for the liftoff. AMD, we kind of covered that, and Adobe already covered that. So shout out to those in place. There might be some more that pop up, but as it stands right now, that's what we got. We also got, I think we covered CORN, AVGOs there, and GNL. So GNL, a little bit of a different story on GNL here. It's in a downtrend, so I'll mark it for you guys where the downtrend kind of started, and the moving average cross. Boom. Right, and you see one setup candle as that thing crossed through. Kind of here, it's in the wrong territory. Some follow through, nice base hit, nothing too crazy. A little blowout candle right there. But essentially, just a nice base hit there. Now, experienced traders might see this and say, okay, I got a Morningstar pattern with follow through. Okay, I can take that with a stop out at the high because it peekaboos up here at resistance. I'm okay with that too. That's pretty good. Why? Because you use this as a setup candle, right? Your Morningstar, your hammer, your Morningstar hammer candle, whatever, combined with the downward setup. This is okay too, right? But it needs to be a real hammer, right? We kind of went over AVGO, and we also definitely tapped into CORN. So you guys know the setup on CORN. Let's go look at the in plays here for expansion contraction. So CL. So shout out to CL. Wouldn't mind seeing light sweet crude. Wouldn't mind seeing that it's been respecting this level, but if you notice, what does that mean? It's an ascending, descending triangle. Okay, so there it is. It doesn't have to be perfect, but you're all you're really doing is I'm establishing negative pressure, right? I'm saying, hey, Our invisible line in space, the market doesn't have to respect our invisible line in space, but I am showing that, hey, there is a descending triangle that's in play, right? You have significant resistance here at this 66.7 level, and as the market continues to put downwards pressure, if you start seeing setups on rips on this bad boy, you might, yeah, might could take it. Okay, you might could take it if we see. Well, if we can get the chart up there properly, that'd be nice. My mouse is acting up. So you see this right here. It's there, but you're kind of close to getting stopped out anyway. So if you're in this play, watch this level right here for the stop out at 71.55. But most descending triangles, a lot of people like to take the break of the low, um, and then kind of set their stop loss and their take profit accordingly. Some people say half the base. So your base is anywhere from 85 to 66. Very wide base. So you could do the math there. Subtract that by half, whatever that difference 85 to 66 is. Essentially, it's like 20. You could do that, and then $10 from the break of this. So you're looking at 56.5 is where your target overall could be, roughly aligned with 3 ATR. So it's not too crazy, but just something to watch, right? If it breaks this target here, the way I would put this one, it'd be almost all or nothing. I would buy a cheap option and just hopefully it goes down to that level. Kind of all or nothing, that bad boy. So shout out to CL. Don't necessarily trade descending triangles, but I'll put the alert there for you if it breaks below that level. Boom. I like ascending triangles a lot better, right? I like ascending triangles a lot better. Outstanding. So, what else we got? That was something positive. So we'll go ZF. Right, we got bonds. Shout out to bonds. In the downtrend here. Now, our setup doesn't necessarily lock in that well with bonds and forex, partly because it's a different beast. The forex, you're comparing two markets, so if there's active participation, you don't know if it's active participation in the U.S. market or the euro market, or the U.S. versus the Canadian dollar, or the U.S. versus the yen. You don't know where the participation is, so the confluence is doesn't translate one for one, right? But for the bond market, I'm kind of doing a little bit more analysis to see, does that translate, which it probably should. I noticed that if there is some, so far what I've been looking at, if there is some volume, it doesn't necessarily just they happen in random spots, right? So this would have worked in your ZF. You get negative here, 1, 2, 3, 4, right? Stop out at the low, prospecting all your buyers. There's a push. You can actually get an add-on and a nice juicy rip. So it does work here. Same thing here. It's still in buying territory. You can almost get a sandwich there, so you almost know it's gonna rip. It does. Absolutely rips to the upside there. Blowout candle right here. If it goes below here, I'm donezo runzo. Anyway, so you're just kind of saving some premium, but really, you're at 3 ATR, all the good jazz. You will have taken profits multiple times on the way up anyway. You have XLE. I think he kind of went over XLE in some of the other videos. You're in buying territory, but there's not really um, the setups there. There's no trigger though. So hopefully we get another setup. If not, the trend might change and we're looking to short the rip on XLE. SYM. SYM, we are actually in SYM, but the thing is we're in SYM with a butterfly. Wasn't too hopeful. Yes, this is an uptrend, but the reality is because you're in an uptrend, but your 21 period moving average is down. What got me kind of sold on it was earnings went back positive, right? So trend change, positive earnings, but this gap really didn't sit well. So if you could fill the gap, I was looking to lock in a butterfly between 40.01 and 33.98. It's kind of where I was hoping to get that butterfly to go into. If it didn't, awesome. If it did, even better, right? We'll go look at the in the slots. I don't think there's much for in the slot. Okay, good. Oh, well, there's some things that populate. Okay, First Solar's there, and you've got I think that's Coca-Cola. So yeah, First Solar got some negative pressure there. Uh, First Solar is not necessarily. I've had some dark days on First Solar. I'll say that. Took some L's, and my first part of my trading with First Solar. Just totally now looking back now, trading in the dark with this thing, man. I got beat up on First Solar, but if we would have traded it now, probably would have done a lot better. You can see here it's in the negative territory. You can take this position here, nice juicy rip to the downside. Would have got a nice base hit and or even base hit down here on the blowout candle, and then same thing happens as it rips against you. As it rips, not against you really. You could take that play to the downside, and it would have had a nice juicy follow through, even down here to the low. Would have definitely been taking a base hit on that profit, right? Just a nice 1 day move to make your day, right? If I start seeing stuff like this, I'm rolling it, taking some profits. It's a nice juicy push, and you kind of with rolling, you take the angst and the anxiety out of, do I take my profits? Do I take it on right now? You essentially just pull your money off the table, and now there's no pressure, right? Coca-Cola taking a beating, right? Clearly in a downtrend. You could have took this nice juicy base hit there. Would have been a stop out up here, entry right here, follow through, boom, right? Very simple for KO. Not really seeing anything else there. The rip wasn't to my liking. It didn't even get into really the 8 pre-moving average. So not too much to say about that, right? John Deere is here, and very like I even said that I was like, man, John Deere was looking good, but earnings is coming up, so I went on and passed on it. But John Deere did rip absolutely through that. Okay, case in point, people would be like, earnings this, earnings that. The reality is the setup actually happened before earnings. You got a heads up on which side of the play you wanted to be on for earnings. It is in an uptrend on the weekly. Nice dip. Here's your setup. Boom. Massive rip. Okay, massive for earnings. Probably would have took some off the table on the blowout. Continued firing off. So at like the highs, you almost roll it almost open and close of this day, whatever day this is, 11:25. You would have took the roll here, and then at open you could have took some more off the table, and even at highs, taking some at 3 ATR anyway, which is what you want to be doing anyway. So massive play there, and it's in an uptrend. So if we could see some more pullback, maybe a setup candle, and then a break of that, looking good, baby. Full bear. Nothing there. Awful. They're generating late. D. We talked about Dominion. It's in a downtrend now. Shout out to Dominion, looking for the rip. So keep your eye on Dominion, looking for the rip. We want a setup candle in the rip. That's kind of what we're looking for. So if we get a guy off sides in that territory of the red, then guess what? We're going to be looking to take that to the downside. We kind of went over these guys, XLA, XCOM, UNP. Didn't go over Union Pacific. Very, very choppy. We had made money on Union Pacific. Took this setup right here. Kind of took some heat on it. It did end up going in our favor. I did respect my buyers here. This is kind of one of those occasions where I was like, well, the buying started 2 bars here, down here. So I respected all of my buyers. You can almost argue that they started down here. But 2-bar professional, didn't get stopped out, got close, fired, took my profits on the blowout, and then as it crossed below that, went on and let it go for that nice juicy base hit there. Right. I did actually put a setup alert. If it broke that, it didn't. It never got back up there. So shout out to our profits on Union Pacific. That's Why I have two full bears? I need a full bear, full bull. Watch. No, that's the full one. That's a full one. That's a weighted one. And I think we went over this already. Yeah, we did. So, guys, thank you so very much. If you guys have any questions about trading, or what books, or kind of like how do you become a more effective planner with your trades, you don't necessarily have to even take this setup. You can create your own alpha, your own edge, and it works. If you believe that you can do this, I'm telling you, I just showed you how simple I go into the market. It essentially takes me about an hour 30 minutes, putting plays together, and then seeing if they come to fruition, but really letting the tools do the job for you. So keep in mind that, as a recap, they do have the Fed coming on Wednesday. So that freight train is going to be hitting the market potentially with new Fed cuts. So keep that in mind. But thank you guys for joining me. This is your boy MC Fire. You guys have a wonderful day. Thank you for joining me on these Sunday calls. Have a good day and goodbye. Peace.